thanks so much for your patience while I get this figured out for 13 minutes. But let's 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 dive into it. You know, basically, I just want to talk about my journey getting into crypto taxes because I did not come from this as a background. What I was explaining earlier is that I actually spent a long time in the film industry, about 8 years. Worked with Discovery Channel, worked with Imagine Dragons, kind of traveled all over with the aspiration to become a film director. And that was cut short just because the gatekeeping in the space was super real. And I realized pretty quickly that, there wasn't a very solid path. And so I ended up going into YouTube. And after about 2 years in YouTube, I ended up working for this man that you see here on the screen with me. His name's Scott Paul. Scott Paul's a very close friend of mine now. And at the time, he had created a LinkedIn post basically looking for an individual that would come out and film his life, kind of like a vlog, and then, follow him all over chasing kind of crypto conferences. And so that channel's called Life with Scott. It's ridiculous. You can go watch it if you'd like. But the other part of the caveat wasn't just that he needed a good filmmaker and videographer. He wanted to pay that individual in cryptocurrency. And so um, I remember telling that to my wife, and she's like, cool, like you should look for a real job. And I was like, I get it. I get it. But there's something to this. And so I did that. I followed Scott around for about a year, and we saw all sorts of crazy things. But one of the things that kind of stuck with me and never left was actually how much invention we saw everywhere we went inside of the crypto space. It was really invigorating. It was really inspiring. It made me want to be a part of that. And so, kind of push came to shove. It's tax season. My CPA, when I took the job, basically fired me. He told me that, he's my CPA of 5 years. He'd known my finances probably the best and did a really good job for me. And he said, once you move into cryptocurrency as your full-time salary, I will no longer be of any assistance because it would cost you, more to pay me to do the work, not knowing how, than it would for you to just figure it out on your own, probably. And so that was pretty disconcerting. Like I just couldn't believe it. It was pretty frustrating. And so the very next step for me was, how do I do this? And I've been pretty computer savvy most of my life. Started building, desktop computers at the age of about 7, and playing around in all sorts of random, GitHub uh, posts and just seeing what computers were capable of. It's actually how I stumbled on cryptocurrency in the first place. And from there, what I wanted to do is I wanted to go and figure out, what the best platform to do my taxes was. I live in Utah, and TaxBit is literally up the street from me. So I figured that that was a pretty good place to start. When I plugged in my information, the numbers were so wrong. It was about 6x what it even could have shown. And that didn't make any sense. And so I panicked and I took my information to several other platforms. I ended up testing 6 platforms over the course of about 2 months. And I couldn't believe my eyes. That's when I kind of started to create a log. I wrote down as much as I possibly could concerning what each platform's labels meant, right? So if it says trade, what does a trade mean in this platform from a tax perspective? And so I created a big key that like a universal key across these five or six platforms that helped me understand why. So that kind of brings us to what MoonTax is. I found out that not very many people wanted to spend hours and hours and hours digging through their their tax, well, it's their crypto data, their transaction data, to then categorize it and find the appropriate tax. And even if they did want to do that, didn't have the skill to do it. And so for about a year, I sort of uncovered why the IRS was why they gave out the revenue rulings that they did. And honestly, my conclusion was, at first I thought it was ignorance. I thought that they just wanted to be overly cautious because they didn't know exactly how it worked. And later I've kind of come to the conclusion that I actually think it's intentional. And I don't think that there are good intentions there. And so the journey really at that point was figuring out, okay, these are how the platforms work. Um, how does tax work? And so my partners are highly qualified individuals in the tax space. The first partner is Nate Bradshaw. He is a principal at B10 Capital. They're a tax mitigation and deferral strategy company for high net worth individuals. And then my other partner is Ephraim Olson, who is a Harvard grad tax attorney, got his emphasis in taxation from NYU. And the journey, most of it was me explaining to them from a detailed level what cryptocurrency was and how it executes on chain. And then, on the other side of things, it was them explaining to me how tax works and how it could potentially work in tandem with crypto. And that's about the time that Ephraim and I, our stories, we met, and 2 days later, I brought him on a trip with me to Puerto Rico to go to a Bitcoin conference. At the Bitcoin conference, we ended up leaving and talking about legal opinions for days. I wanted to know everything I possibly could about them. And our conclusion essentially was that legal opinions, let's see. So legal opinions can help individuals take tax positions that are contrary to revenue rules. Now, we wouldn't necessarily encourage them to take contrary positions, um, on stances that we feel it's hard to prove or that we don't necessarily agree with. Oh, nevertheless, they can pay for an opinion if they like, but the whole purpose and intention was, there were several categories while I was doing my own taxes and finding out what I found out about, hey, this was my understanding of how crypto works. And from what I know about tax law, I don't believe there to be tax in these several cases. And Ephraim, after giving him all the research, he came to the same conclusion. So just a quick tidbit about Olson Partners Law. Olson Partners Law is a Utah sandbox law firm. What that means is Utah is one of two states in our nation that will allow for unique hybrid like law firms. And so I am not an attorney, but I am highly technical, especially when it comes to cryptocurrency. And Ephraim is our representing attorney. But I am, because I've gone through the Utah Supreme Court and this other rigorous process, I am a partner in Olson and Partners Law, which is traditionally not possible. And the reason for this program, this sandbox program, is to allow unique structures like Olson and Partners Law to exist so that we can better benefit the general public. Ephraim is a very, very talented individual. He is one of the smartest attorneys I've ever met, but he is not out the gate the most technical. And so me being able to come in as a partner, provide a lot of context, you know, will allow him to structure and has allowed him to structure these opinions in a much better manner. So we started pretty small. Our first opinions, my very first problem was that I was taking assets from one chain to another and then off-ramping them so that I could pay my mortgage and feed my family. And so wrapping, bridging, routing, that was a major concern for me. I didn't feel as if I was changing the underlying asset, token, coin, I felt like I was just moving it from one place to another, but because of some of the limitations of the platforms I was using, I had to change the ticker symbol. And so, our kind of our original theory, which has evolved quite a lot, is that um, you know, these digital assets are treated as property, and if the underlying property is the same, essentially, then why would I pay tax on it? So this is sort of a question that we still have to ask ourselves every single time we start an opinion for someone. Um, but the assets that we've really found is that staking and liquidity pools, we believe that there's still ownership there. We believe that the rewards that you receive from doing those activity, that those are, you know, that you do not claim ownership until you've disposed of said asset. The same goes for mining and validating, and and I was also doing really, really risky leveraging, which I didn't completely understand at the time. But essentially, you would take, a high level asset, you'd stake that. You'd receive a liquid staking token for that. You'd bridge that staking token. You'd stake that. You'd receive another liquid staking token for it, and so on, to the point where I felt like I just had free money. Um, 3 Hours Capital and all of the others that followed showed us how probably not smart that is. So I don't do that anymore. But this loan collateralization, this leveraging, those were also things that it was showing trade after trade after trade, and I just didn't quite know where the trade started and stopped from my perspective. And then finally, airdrops is something that we also believe um, is a little unknown. Ownership, we think, it is the sole point that we have to understand in order to clarify the taxation. And so we did this. This was the whole spiel. Was I was going to people in my network, and I was basically saying, listen, I know that you hold crypto. When I went and did my taxes for my crypto, none of the platforms showed me a correct tax. And even after I corrected it, in accordance with how I understood blockchain and crypto assets to work, I still am overpaying until I took a legal opinion. And after I took a legal opinion, at the time it was only two categories. I believe we were doing staking, liquidity pools, and wrapping, or yeah, three categories. So staking and liquidity pools and wrapping and bridging. And and basically my point was, after I took these certain opinions, I was able to classify the transactions inside these applications in a way that showed me a absolutely fair and reasonable tax. um, it was showing me finally numbers that made sense with how big my holdings were, and it was showing me, kind of returns on those investments, in a very accurate way, not this super inflated price or these inflated gains because of my movement, or yeah, my crypto movement. So that was kind of the beginning and the end for us. There's obviously lots and lots to come from this, but right now, how we get a lot of our business and how we, kind of support much of the industry is we will have individuals who have, and I think most of us have individuals that come in and that they have a very high number, capital gains, maybe even an income number inside of these, different, we refer to them as CATs, crypto accounting tax softwares, inside various CATs. And so they come in, they show these big numbers, they're freaking out, and they go, I have no idea what to do. My favorite story from this last year, we had an individual, he bought a doodle. Well, he bought 5 doodles, for a very reasonable price. He was super early. And he logs into their website one day and it says that he can put them into outer space. And so he clicks on that for each of his doodles, basically incurring a $25,000 wrapping event Um, and it was money that he didn't possibly have. And it was it could have ruined his life, basically. We looked at it, and in some cases we can't help, but in this case, we felt like there was a legal opinion here that we could represent him on. And so we wrote the legal opinion. He ended up paying no tax on that event and ended up working with our other firm, MoonTax, in getting and kind of clawing those numbers down to what was accurate. It was very beneficial. We also work with other individuals who come from, kind of partner firms. So I don't know if you guys know Cameron Brown at Darian Advisors, but they've had several clients where they've been doing both the reconciliation work as well as the filing work and strategy as well. And they have employed Olson Partners to come in some unique situations, help provide legal support. So that's sort of the idea with Olson and Partners and MoonTax and the journey of how we got to where we're at. The next thing is Beam. I don't think that this is something that is it's a great product, and on occasion it can be a poor experience. We do get a lot of volume on the Olson and Partners side, and therefore we get a lot of volume on the reconciliation side. Beam, the whole purpose of Beam, it's a SaaS that's coming here in the next couple of weeks, months. Um, in different iterations, we've got a pretty rigorous roadmap. Uh, but the idea with Beam is that we automate this entire process. So individuals or firms would have the ability to input their clients' data and to receive, uh, soon live feedback on that individual's opportunity for legal opinion analysis. And it will come back with numbers and essentially let you know how quickly, first of all, we can get the opinion to you. And then secondly, what we think your overall savings would be. Um, the idea here is that I think this will kind of come in phases. I think the first phase really was the world ramping towards having really talented CPAs and reconciliation specialists. And I think we would all agree that, that we need a lot more of that still. But I think this space has caught on quicker than legal will catch on. I think legal's coming next. And then I think, it will, become normalized over time. But Beam's full intention is to help automate that process so that you guys don't have to, have all this handoff, and it's just a much cleaner experience for you and your clients. So that's kind of the full spread. I'd love to take some questions now. I'm not sure if anyone has any comments, questions, open discussion, whatever you guys would like to talk about at this time.
Yeah, there's actually two questions in the Q&A box right now. So
Okay.
JC Tax is asking, have any of your opinions been challenged by the IRS? In the meantime, guys,
Yeah,
if you have any questions, feel free to add them to the Q&A or just simply turn on your cameras and mics and join in.
yeah, that's great. So with how so we've been operating for 2 years now. And really I would say that we got really going about a year and a half ago. So we have not had anything challenged by the IRS. These opinions are extremely thorough, and they're both based in tax law and in how blockchain operates. And so it was a major goal of ours to construct these in a way that was both backed by proof and made very, very thorough logical sense. And so, no, not at this time. However, Ephraim's career has been working sort of in the, client representation and IRS court space. And so, probably once a month, he has a call with commissioner at the IRS saying, "Hey, man, how do we settle this case of yours?" And so he's very well versed in what that process is. Another thing is we we do have a course that we launched today. It's a free email course. It walks you through, you know, all of the different, basically from the consumer perspective, what an audit would look like and how this would help you. So I hope that answers the question. The site's called defendyourcrypto.com. Let me know if you have questions about that. Clients in the cannabis industry. So are you referring, is the question, do we write legal opinions for the cannabis industry, or do we support individuals who are in the cannabis industry that have crypto? And let's see.
I think that's what she's asking is if you.
Okay, yeah, both.
Yeah.
So we have clients that have crypto in the cannabis industry, but not specifically for their cannabis business, if that's your question. Our team, Trent, he's our head of growth here at MoonTax. He has, I think he has about 6 or 7 years under his belt in the cannabis industry. We've been working towards that. We just haven't had the opportunity yet. That's not gonna, that doesn't scare us though. We'd love to talk to you about that. Um,
So
so yeah, go ahead.
yeah, I just had a quick question. I know there's another question in the Q&A, but so can you help me better understand what the wrapping event was with that that NFT? Was it just like, you know, like a tool within that NFT collection that allows you to kind of change the nature of something, but it's really still that same NFT? Is that what was going on with that example you gave?
Yeah. No, great question. So it was literally Doodles released a, you could basically take your doodle and you could put it in a spaceship, and it was called Space Doodles.
Okay.
It was absolutely the same underlying asset. You just were able to put it in a spaceship. And the process, you know, it was seemingly harmless. It didn't, you know, as I was looking over the situation, the website basically, you connected your wallet and you performed the action, not knowing that it was actually changing from the IRS perspective, the asset type, right? Because it becomes now Space Doodles and it has a new ticker and it's got, you know, basically a new number. He had no clue that anything from a taxable perspective was occurring. He just thought, hey, cool, I'm a part of this fun project. They released this new little thing. I'm gonna do it. I want to see what it looks like. But the gains on that quote unquote trade were $25,000 each. And so he was about 130,000 into it from a gains perspective when, you know, and then basically our legal analysis came in and we were able to change it in a way that essentially stated that no change had occurred, that he still owns the asset, that the value wasn't, you know, inherently any different. And so you know, and there's a lot of ways that we dive into that. It's probably more appropriately spoken, you know, by Ephraim himself, but yeah, definitely, Taylor.
So in that instance, then you are basically getting this legal opinion so that now if that individual is to be audited and they're like, hey, why didn't you pay taxable gains on these? They would then lean on this. And even if the IRS was like, okay, well, we don't agree with this, they at least would have some additional protect, or not protections, but just they've done their due diligence and they've put forth the effort to hire some third party that knows this stuff and specializes in this stuff to help them form this opinion so that they can now kind of justify this and hopefully not have these penalties and fines that would normally be associated with taking a risky position like that. Is that kind of the use case here?
Yeah, what's actually really nice, and the whole reason that we've gone through the trouble to make this happen is because essentially how this works is the individual, so you can take a legal tax position and get an opinion written for it. And the opinion in many cases, it may not agree with you and it may not agree against you, right? And so it's it's kind of constructed to be a neutral position. But in this case, we very much believe that some of these you know, the opportunities that I listed on that prior slide, that those are accurate. And so to your point, the reason that you get a legal opinion is kind of as an audit defense. So if the IRS comes back, just like you said, you'll likely just get a letter first.
Mhm.
In response, you would have the burden of proof. You'd provide all of those assets, and then you'd wait to hear back. Luckily, because we have due process, the IRS can't just be like, oh, we disagree, pay the tax, and here's a penalty. They would have to go through all of their audit processes and then ultimately go to tax court to overthrow you. So far, industry wide, we don't know of a case that has gotten overturned in a tax court. Every time so far, they've just settled. And so, our position is that this is super complicated. The IRS doesn't necessarily want to set precedent. And so what they're trying to do is they're trying to stave off the onslaught of crypto users until, the Congress can pass, some good laws that then will back their position as they start trying individuals through the audit process.
Should I start holding my breath now for that, or should I wait a little bit longer?
I don't know, man. I've been holding my breath for a long time. I'm running out of lung capacity. Our thing is this too. So beyond this, I just want you guys to know that we're not scared of these positions. We wouldn't write it if we didn't think it would work. And it goes even further to basically say, we would go as far as countersuing them after, if at some point in the future we lose in tax court, going to a unfavorable district court and pursuing that as a kind of a countersuit. And it's because no one's doing anything inherently malicious. This isn't like, go ahead.
Well, I mean, looking at something like as cut and dry to me, as wrapping or bridging, like what's happening on chain is you're literally taking assets and you're locking them in a smart contract so that they can be used. So that you can add utility to them, right? You're not
Right.
changing what's happening. You're just like, if I want to trade Bitcoin on the Ethereum network, I need to wrap it and put it in a smart contract, and then I have Bitcoin. And yeah, it may slightly vary just because of arbitrage, but opportunities happen in every market, right? And so
That's right. That's right.
I
Yeah.
mean, the argument that I've heard is that the price can differ, but like you can still go back and claim real BTC if you have wrap Bitcoin. So
Yeah, and this is not again, I think we kind of come from the point of view that this starts, like, your taxable event starts once you've claimed ownership. So when do you claim ownership of an airdrop? Right? Like, if I receive an airdrop and it's worth $10,000 and then I sell that airdrop and it's worth 15,000, I claimed ownership when I sold it. So in theory, I received it for 0 and I sold it for 15,000. There's going to be a gain there. That makes a lot of sense. What doesn't make sense is if I receive an airdrop, it's taxed at 10K, and when I finally get around to selling it 2 years later, because I had diamond hands, and it's worth 25 bucks. Sure, I guess you could say, well, you're taking a loss at that point. That's nice, right? And it's like, yeah, it's okay. But the only reason I got the airdrop in the first place is because I already owned property. So if I buy a house and I build a pool, I'm not taxed on the pool the year that I built the house. I'm taxed on the pool when I sell the house with the pool, right? So there's a lot of philosophy going into this, and yeah, it sucks because none of it's been contested yet. But it's also, it also feels nice to say, yeah, we haven't been contested on our positions yet, and we like to think that it's because they're well constructed. I would like to go to this other comment in the questions. How long does the legal process usually take for these types of problems for cryptocurrencies? So I assume that this question, are you talking about like tax court, like audit type stuff, or are you talking primarily, how long does it take us to work with the client and to get them an opinion? Oh, and I think I might have to scroll down.
Maybe start with that, how long it takes to formulate and work with a client. And then if she clarifies further, we can answer that as well.
You said both audit and working with the client.
Yeah. Okay. So let's start with working with a client. It varies. So some of these clients have super complex trading and others have, hey, I was doing Lido staking and I just need something to protect me here. So but in both cases, from the time that we have our first initial conversation to completion of the first draft, I guess I should state, would be about 2 weeks. And then final draft can take, depending upon changes, anywhere from 2 weeks to a month. So that's pretty straightforward. It can be faster than that if we need it to be, but generally, I like to say 2 weeks to a month. And then as for the audit, I mean, audit processes can be lengthy, right? Because once you start to involve judges at any level, there's a lot of discovery, there's a lot of back and forth, there's a lot of kind of discussion. I don't know that I would be the right person because I'm not an attorney to give you that appropriate answer, but I'm sure if you wanted to know, I could get you on a call with Ephraim and he could talk to you about the process. But yeah, longer than 2 weeks to a month. And then JC tax. So excuse my ignorance here, but in New Zealand, we would ask the IRD for a ruling. Is that not something that happens in the US? Again, I think Ephraim would be better suited to answer this. From what I understand, though, is yeah, I mean, there are going to be many stages of this. Again, they can't just be overturn and kick you down the road and have you pay. There would be, you'd receive a letter in the mail that probably would not be very specific. So it wouldn't necessarily detail, hey, we found on this chain that you have X activity and we don't agree with that. You need to pay up. It would be, hey, you need to send in all of the materials that you have for concerning your taxes and your crypto holdings. And then at that point, if they thought that they found something a little suspicious, then they may dig into it, and then it may go to field audit, and then it may go to tax court and beyond. But it's not just like a thread the needle. It's a more lengthy process. Okay, so Sharon, yep. What is the average cost a client needs to pay for getting a legal opinion based on the cases you've handled so far? So we have done actually quite a few. It's really started to ramp up in the last probably 8 months. So they start at $10,000, and we ensure that you're going to basically save 20,000 if you spend 10. So you have to have savings that are well beyond what you're going to pay us to do this. In some instances, and we're reasonable. We'd like to negotiate. Again, the whole point of this is to work with the client and get them a result that is very beneficial, that benefits the whole industry. So essentially per position, so it's 10,000 to start, and then we cut the price in half per additional position. So let's say you have 4 of the following. So it's 10,000 for the first and then 5,000 for the subsequent. So you're looking at 25 grand. But again, we'd have to see basically $75,000 in savings to justify that. So you'd pay us 25, but you'd be saving 50. And in many cases, clients that we do work with, we will go back and amend prior years, especially with 21 and 22 looming in our past of massive gains, then massive losses. We think that these legal opinions have helped considerably, and so that's kind of where we start. Okay, cool. So I think I'm caught up with questions. Anyone else have any comments, questions?
Can you elaborate a little more on I-beam and just, what the plans are and what you guys are working on exactly?
Yeah, so I mean, this is a labor of love. it is the first time that I have personally ever commissioned software to be built. The whole house is, or the whole team is in house. And it was really built with the idea that, and I see it all over the internet, all of the crypto CPAs, they kind of have their platforms of choice. And I think that what's difficult about that is, when clients come in from other platforms, it's really difficult to get their stuff ported over to the platform that you prefer to work with. And so our whole original thesis was we want to make it easy to port information from one platform to any other platform. And so that's where we started. And then I realized that we could use machine learning models to automate finding these certain triggers for, does a client qualify for an opinion or do they not? Because that used to be a very lengthy process of like, okay, well, even if you're working with another crypto CPA, we need access to the account. We need to look through it for hours and kind of compile, okay, when we change these 45 transactions, what will their savings be? Okay, it's going to be this is going to help them, and now we can qualify it. The goal now is to be able to do that in 20 minutes. And so the idea would be that you come through, you import your wallets like you would into some of these other platforms, and we will spit you out a result of how many different legal opinions that we currently provide you could take. And so at that point, we would calculate the savings and then we would calculate the expense. And so our hope is that you guys wouldn't have to, because we get it. We have a book of business just like you guys do. It's a little hard to collaborate with one another sometimes. And so what we want it to be is we want it to be your relationship that you control, that you own, that you can input into our platform, get the results you need within an hour, and then go on and sell the opinion yourself, right? Through with our help, and do the work, get paid for the reconciliation and get paid for your filings, right? And so and we still agree, we think the reconciliation if you guys have the right people, I mean, you can demand a lot of expense there because it's a timely process. And so we want to still give you guys the opportunity to own your relationship and not have to like fear that you're passing this down over to us. And so automation's the goal. So our whole back end, it's not using ChatGTP. This isn't some wrapper of someone else's stuff. This is in-house machine learning models that we have built around identifying legal opinions and qualifying customers. It will grow from there, but for now, it's coming. We're really excited. We're very close for our first version of it. It will be a closed beta. I'd love to give everyone access in this group. Love to talk to you guys lengthy what it does. We're not charging for now, and so help us know where it sucks, and in turn, we want to help your clients get the support that they need.
Absolutely. I just placed the link in the chat for everybody to go sign up for the early.
And
as well.
there's one more question in the chat. Norm had a question. Do you ever see people paying a small tax on a small sample transaction and then taking it to a more favorable district court instead of not paying and going to tax court?
Okay, let's see. Yeah, that is a great question. So again, this is not me speaking with my own experience. This is me speaking in behalf of Ephraim. His details would be a little clearer. That has definitely happened though in the past, in the sense that you can basically settle on the IRS's terms and then pursue it, right? That's your right as a US citizen, is to be able to take this through the judicial branch and have a judge decide. So and we're not working with as many mines now, which is a little unfortunate. We'd love to support the mining industry, but part of our original plan with Olson Partners is that we were going to go scoop up a bunch of Bitcoin miners in Texas, because their district courts definitely favor the people. And that was a strategy initially. So yeah, I mean, if we felt like it was, if we felt like that was the path forward, we would absolutely pursue that.